today we're going to talk multiple realities. That was a matrix, in case, never mind. Let's just talk some trading. So if you are anything like me, and I'll explain what I mean by that here in a little bit, then the point of this video is more so just to give a massive benefit of charts and why I like technical analysis so much, why I use it, and how it really assists me in trading. And this all has to do with the multiple realities that are in the market. Now, I'm not going to get all scientific on you or sci-fi, but there are many realities in the market. There's actually two main ones, and they all revolve around events. What do I mean by events? Well, an event could be something such as earnings. You know, the typical event where a company just tells everybody, updates everybody how they're doing from a financial perspective. Now, what comes along with this event is two realities. The first type of reality is the trader reality. And this refers to you and I. The other type of reality is all about the true reality. You know, the actual reality, whatever you want to look at that. How are we defining true? What makes it true? Well, what makes it true is price action. It's what the price is actually doing. So kind of just keep that in mind. That's what's going on with true reality. So an event such as earnings occurs. And I'll just use, my situation because I'm terrible at this, and it's had happened multiple times, and it, is a reason why I don't trade a certain way. But an earnings report comes out. I look at the, press release that always comes out, and I think, wow, revenues are increased, profits increase. This is good. This is very good. So my reality, my opinion on the matter is that it's good. The event is good. It's bullish, whatever you want to call it. If you've been around a little bit, not even that long, I mean, if you're brand new, of course, you couldn't relate. But if you've been around a little bit, there's been some event, maybe not necessarily earnings, but you look at it and say, oh, wow, that was good. But that is just my reality of the situation. That's your reality of the situation. What I love about the market, what I think makes it so entertaining and just so challenging is there could be the same exact event, and you're going to have one trader whose reality is, well, that's good. Another trader, same exact event, their reality is going to be, well, that's bad. And that's just what the market is, a bunch of conflicting choices. But how can we tell what is actually the true reality? Well, that goes to, again, the price action. So to get just a little philosophical on you, but I promise I'm not turning this into a philosophical debate. So earnings come out, I think that they're good. Revenues increase, profits increase. But the price action of the stock goes down. So is it really good that the profits increase? Is it really good that the revenues increased? Well, I mean, like I said, I'm not going to turn this into a debate, but as far as what a portfolio is concerned, as far as what your position is concerned, no, that's not good. Because if you bought because you thought it was good, price is going down, therefore your account value is going down. Well, I don't know who would define that as good. So the point being here, price action gave us the true form of reality. Not what people thought, what is actually happening. Price is going down. Let's look at another event. And this is kind of just, at this point in time, oil has been in the news for a while, and it's, I don't think it's going to go anywhere. But there's lots of these oil reports. So some sort of oil report comes out, and again, you see it, and you're thinking, ooh, that is not good. That is bad for oil. And then you wait and wait and wait, or maybe it happens right away, and then what happens? The price goes up on oil. Have you ever been there? Have you ever thought good or bad, and then the price does the exact opposite of what you would think after basing, looking at the numbers, looking at the report? Like I've been there many times. So is it really bad? Are those numbers bad? Well, if you shorted, meaning you would want to make money when the price goes down, and now the price is going up, well, no, that is not going to be in your favor. That's just the market disagrees with you. So true reality, price action. That's what you got to focus on. What is the price actually doing? Let's look at one more example. The Federal Reserve, they're always having speeches. So the Fed minutes, where they're released, so what did we actually talk about at the meeting? And again, you look at that and say, oh, okay, this is all right. This is, yep. again, and you go, good. And then once again, hopefully you get the point. Sometimes I don't want to make it sound like you're always wrong, because yeah, maybe you're right and it goes up. But the fact of the matter is, you could just be as wrong and it could go back down on you. And what I'm trying to get across here is that headline trading, trading reports, trading just simply headlines, quickly reading something and then making a trade, yes, it can work, but there's also a whole lot of times where it just, nothing makes sense. And when you stop and think about it, if the market always made flawless sense, if the market always went according to what would be logical, it would then become predictable. And if it became predictable, well, then everybody would do it. Everybody would make a gazillion dollars and live happily ever after. But it's not like that, right? Because not everything is logical. Not everything makes sense all the time, which always is keeping people on your toes. So for me, I don't like this aspect of things. I don't like to have to trade on what I think. Because I'll be perfectly honest right here. What I think, my reality of situations can be just terrible at times. I can just, that stock is gonna get hammered, and then up it goes. All right, so I don't like to use reality. I like to use, true reality. Meaning, what's actually going on? Because that's what's, actually going on. That's true reality. That's all based on price reaction. And what is based on price reaction? If you have any sort of experience, charts. Charts are all about price action. If you don't have price action, then you can't have a chart, because that's one of the main functions. And charts are going to tell you what exactly is going on. So a company could have great earnings. In your perspective, oh wow, they blew out estimates. But then if you look at the chart, price action, and the chart starts to fall apart, apparently the market didn't think that they were good. So you can form a trade plan around that based on the charts. Now, just to be fully transparent, just because I don't want to make it sound like charts are great, you are going to miss out on some opportunities, because if you have to wait to see what the market thinks, well then yeah, your opportunity box is going to be a little bit smaller, rather than somebody that just essentially gambled and said, you know what, it's good, I'm going, boom, and then they got to wait and see. I mean, but if they're wrong, ouch. If they're right, yeah, they're going to get much more person than somebody that actually waits to see what happens, waits to see what true reality is. So yeah, you can certainly gamble ahead of time, because you're going to know, for example, what time the oil report is out. So if you want to go long or go short before the report comes out, yeah, you're going to be in a good spot if you're right. But if you're wrong, and remember, things don't always make sense. As much as things could all point to, oh, it's going to be good, it's going to be good. The market is not that kind. That's what keeps the market functioning, is because things aren't always logical, which makes it unpredictable. So just keep that in mind in regards to that. I would rather miss out on a little bit of the move in order to ensure I know what's actually going on, what the true reality of the matter is. So, but like I said, if you're super good, if you're like, yeah, that earning's good, and the price goes up, if you're like, that earning's bad and the price goes down, and you're doing that like 90% of the time, then hey, you don't need charts. You're just like really good at forecasting the future, and just you're just a good headline trader. So keep that in mind. Hopefully this makes sense, but this is why I use charts. I'm terrible. My reality of what I think and then what actually happens, yeah, sure, I'm right every now and then, but the problem is when you're wrong, especially if you're speculating, getting in before the event, things can go really wrong for you in a hurry. So I prefer to just be a little bit more conservative, figure out what true reality is, and then start to base my trade decisions on that. So if you fall into my camp and you've had way too many instances of that's bad and then price goes up, then yeah, maybe you want to give charts a try, because they are focused on true reality, all focused on price action. So that could definitely help you out. If you found this video helpful, click that like button, click the share button if you're watching this on YouTube. Please subscribe to the channel, lots of other good content on it. So definitely check that stuff out. Thank you for watching, and keep in mind these two realities.